into today, I wasn't sure if these three pushes would count as a wedge, because the pullback from this second push is disproportionately small compared to the pullback from the first push. So it might be that the market starts counting the pushes here, 1, 2, 3, or that you have a wedge, a breakout, and a pullback to a higher high. But no matter what happens, I think the market is going to try to pull back. It's trying to get two-sided in here. A little spike up here, a little spike up here, bigger spike here, bigger spike here. So I'm assuming that at some point over the next day or two, the market's going to start working down. We're in the first month of the new quarter, so this is earnings reports. And I don't know if there is a greater tendency for gaps. I imagine there are, depending on what the earnings reports show. And so if there are earnings before the open in the morning, or most of them are after the close in the afternoon, it increases the chances of gap opens. At least in my mind it does. I don't know if that's the truth. Coming into today, as I said a few times today, the market's up move is losing momentum. Friday had protracted two-sided trading in a tight trading range, a little breakout and then more. And we opened up in the area of this trading range. Friday closed with an expanding triangle, 1, 2, 3, and a sell-off. And expanding triangle tops more than half the time are followed by expanding triangle bottoms, which it was with today's open. A new swing low, pullback, first gap bar, and several hours of trading, and a good close. I didn't think it would be a trenders bar bull, because the market has been losing momentum on the bull side over the past few days. So I didn't think the momentum would pick up again. And we've been several days away from the 60-minute moving average. So that will act as a weight around the market and prevent it from, or tend to prevent it from going up very much. So I was looking for a trading range. This is a magnet, and it should tend to draw the market back to it. This trading range, like all trading ranges, is also a magnet, and it will be hard for the market to break free. So anyway, this is an okay scalp. Not a great entry bar with that tail, but a very good follow-through, so the odds are high that there's going to be more up. What about shorting the first attempt to reverse yesterday's high? It's another expanding triangle. Now it has a fourth push up, 1, 2, 3, 4. With this much momentum, the odds are very high that the first pullback is going to be. So I don't want to short. And here's the first pullback, and it was bought, and it only went up 4 ticks. I think this is the second attempt to reverse yesterday's high. Another expanding triangle. I think it's an okay short. There's room to the moving average, but since I'm looking for trading range price action, I was scalping. This is not a good-looking signal bar for a high 2 long, especially after a buy climax. If you draw a trend channel line across these two bars, you can see that this went way above it and then closed below it. A buy climax. So I'm not looking to buy right away. And whenever I see a bad-looking high 2 signal bar in a situation where I'm expecting more down, I think it's a pretty good short below the entry bar for the failed high 2, and that's what happened here. Just down 1, 2, 3, possible 1, 2, 3. So possible wedge bull flag, strong spike up, less momentum down. This is enough momentum down, these 2 bars, these 3 bars, for me not to be buying the first breakout. So I think there's a pretty good chance that there's going to be one more push down, probably to a lower low below this. So that's probably going to be setting up an okay short. Outside down, the market should get a high 4 long. You get a failed high 2, and then a breakout with a lot of momentum, enough momentum down to expect 2 more legs down, and not a wedge or a high 3. So here's the high 3 attempt, and it failed. And the market pushed down, trying to form a high 4. High 1, high 2, high 3, high 4. This is down for me to be buying the first breakout of this little bear channel. So if it does become a high 4 here, I'm not going to buy it. Okay, one more plunge down, large range bar. Could be a sell climax, could be a breakout. We could be getting a double distribution day. In other words, a trending trading range day, an upper trading range, breakout, and a lower trading range. We're right in this tight trading range, and I think it's going to be hard for the market to go very far from there, so I'm not looking to short down here. Second breakout bar, this could be a 2-bar breakout to a measured move down. I think it's more likely that the market is going to have a hard time going down here, and instead it reversed up and the breakout failed, and this is the high 4. High 1, high 2, high 3, high 4. With this steep a down move, there's probably going to be a second entry long, so I don't think there's a need to buy here if you don't think it's strong enough. Definitely wouldn't short the low 1. You know, this is a sell climax, just like this is a buy climax. And you can draw a little trend line down here, and the market broke to the downside and then tried to reverse up. Okay, tails and dojis in a market that looks overdone, sell climax. To me, I'm hoping for a low 2 short that will fail, and then maybe go more up, maybe to the top of the channel here, maybe up to here. Okay, this could be setting up that low 2. Didn't trigger. Could be setting it up again. Okay, finally triggered. So now we've got a low 2, but it's a breakout out of 5 overlapping or 6 or 7 overlappers. Pretty good chance it's not going to work, and therefore, if the market goes above these highs, it probably will have some kind of measured move up. So I think that's an okay long. Okay, you got a 2-bar breakout. It could have a measured move up. You got a 2-bar breakout down here, but this was after a big bear. This is a 2-bar breakout after the market tried to sell off, so this is the possible start of a move up. Because it's a trading range day, I'm expecting a pullback. I'm not going to short this as a failed breakout. I think this is the start of the move up here, and to me this is enough momentum to have the odds be pretty good of more up. Doji bar not good, second doji bar not good. This tested the open to the tick. It tested the breakout area, tested the moving average, and I didn't buy that, and that was a mistake. Okay, good high 1 long, good looking bar, no tail, but then the strong bear reversal bar. And if this is a trading range day, the market is going to tend to reverse after every breakout of every swing high and every swing low. This is still pretty good up momentum, so even if the market comes down, I think it'll set up a long. I'm not going to buy a high 1 here after a 2-bar pullback. The last high 1 had a 4-bar pullback, and the pullbacks should become more complex, so I'd rather buy a high 2 long here. Okay, another attempt down, new swing low. Not a great looking signal bar, but it could work. It's 2 legs down, 1 and 2, and it's also 2 legs down here, 1 up 2. So the market might be forming a trading range in here, and it's also another breakout pullback. Decent entry bar, decent follow through. Again, more upper momentum. That's pretty good. This is enough up, so I think there probably will be more up. Double top, almost a breakout, so this could operate like a breakout pullback. But today's a trading range day. It's been going up for a couple hours. I don't want to be buying at the top, so I'd rather wait to see if this forms a 1-bar final flag and a reversal down after a new swing high.